Morning everyone, and welcome to today's analysis on the 5th of February 2022. With this big sort of upwards move yesterday, let's see where we are. Going right into the Bitcoin chart on the weekly scale, you can see that last week we made a hammer forming candle. It's great, it still formed a higher low on the longer time frame. With this hammer candle and this week's candle, a green candle to support that price action. The biggest concern at this stage is that it hasn't really made a higher high yet. As you can see there, we can see that on the smaller time frames, but also the 21 moving average. We are still trading below the 21 moving average. There should still be a lot of cause for concern. If you go into the daily time frame, you see this is a great daily candle that we formed yesterday. This is the higher low that what I'm talking about. So you can see still need to break something like $44,000 before it will make a higher low. So until that point, remain cautious. This could just be sort of a pump into the resistance zone for further downside. But let's see what happens. On the 4-hour chart, exactly the same. You can see that the 4-hour RSI is pumping up. You can see also as the price is still moving down, making lower highs. This is making a divergence, so we are not completely out of the woods at this point. A break above this would be fantastic. Funding rate, as you can see, has now been quite a while in the negative territory. And at this stage, this could be the beginning of the move. As you can see, these moves come out of nowhere. And it usually does start with quite a big candle, and then it breaks sort of trend lines. And then once it breaks the trend lines, it starts to move up quite rapidly. XRP also is looking good. Since March last year, it's still making a higher lows on the weekly scale and forming a divergence on the RSI. So from a XRP Long Term perspective, is still looking positive. On the daily scale, same problems with Bitcoin. You are still below or sort of coming up to resistance now. 4-hour scale, you can already see that there is a bit of rejection in this area, which is a bit early. You can see it hasn't even hit the resistance. So just be careful that this is not just like a dead cat bounce or a fool's rally. But the main concern for me still is the S&P 500. A lot of people are talking about being inflated stock market, and we are coming up for a crash. So I thought to zoom out quite a lot. If you look at this point here is about where the Fed started printing money. This is when we went from the gold standard over to fiat currencies. So I'm just going to take it from there. If you had to just take a trend line from there, you can see that the S&P has sort of followed this trend line and bounced on this trend line for a while, and then broken down here, and now finally broken above it. Now the history is pretty easy. This is the mid-80s big crash that everyone always talks about, the big Wall Street crash. This was the tech bubble in 2000. You can see finally the crash. You can see that, the bubble formation there. And then this was the housing market crash. So since then, we've never really recovered. And people always talk about the stock market never recovering and all that. And this is kind of what they're talking about. The stock market's never really recovered. But with all the money printing going on, the stock market has actually recovered now, and is kind of, in my opinion, on the trend line where it has been for a long time. But you've seen that it always keeps coming back and retesting this area. So if you had to then zoom in, you can see we're not quite there. We haven't sort of hit the trend line yet. There is still a bit of downside that can happen. Right now, if you had to look at possible downside, from here, probably looking at 8% or so to get to the trend line. So from the cycle analysis that I've seen, people are talking about a possible sort of a recovery like that, and then further downside like that into middle this year. I don't know what's going to happen, but if I had to zoom out, I do not think that the stock market is as inflated as everyone's carrying on. On the daily scale, you can see that the the stock market has come back to retest the 200-day moving average. So it first broke it above it again, and now come to retest it. So a move up here would be actually pretty bullish. It just means that it came back to retest the 200-day moving average, as it does so in the past. The Dixie, we had this massive bull run sort of earlier in the week, and then drop back down to the neckline. So I must say I didn't expect that at all. I was actually expecting a little bit of resistance here, but sort of camping a little bit up there before moving out. So this move back down is quite interesting. So all in all, I think this is a great bullish candle. This is one of the best sort of weekly candles we've seen in a long time. In fact, it's actually one of the best daily candles we've seen in a long time. Kind of you can liken it to the kickoff of the previous sort of bull run in May. You can see these bull runs, they do start with sort of larger candles. So if that's the case, this is fantastic, but we have to first see that this is actually playing out. If you like this content, please like and subscribe, and let's see you on the next one.